Most Forex traders keep chasing candles on the 5-minute chart. This is not the 5-minute chart. This is the monthly time frame. Okay, and this is an update for analysis I did for this Forex crossbear. So they chase candles on the 5-minute charts, hoping to find magic, but magic doesn't happen there. It happens when you learn to wait. And this example on the dollar versus Hong Kong dollar, the US dollar on the monthly time frame, is a textbook example. Okay, this Forex crossbear is a first example because, as I mentioned in previous analysis, when price was around there, we were expecting this to happen, and that is exactly what we are expecting to see for this Forex crossbear based on the monthly time frame. We call this monthly demand level at 777 weeks ago, and look at it now. It's just rallying, and this is what we are expecting. By looking at the 5-minute charts or the 1-hour chart, you are not going to move the candles. Okay, so the bigger picture, the institutions on the big buyers, okay, are buying here. They are not using the smaller time frames. This was created by them. This is the largest candlestick ever for this particular Forex cross pair. So the big boys are buying here, with everyone else still guessing why it's rallying. So let's dive into the chart and see what happens here, because we are having new low-term swing and intraday trading opportunities for this Forex cross pair. So in the smaller time frames, this is the demand level in the monthly. So in the smaller time frame, and the weekly is a small time frame, okay, it didn't reach that strong area demand because the monthly was hit. And you can see now it couldn't print new lows, which is a good signal, okay? And now you can see the strong rally here, okay, that happened on the weekly time frame. So that's telling us that, well, we have the institutional bias happening here. These candlesticks are only created by people with a lot of money, okay? So it's playing out beautifully. This isn't the first time the US dollar has bounced from this imbalance, okay? Historically, every time the dollar dropped to these areas, okay, it just rallied. In this occasion, it created a new demand level, but historically, the US dollar dips near these areas and then starts to rally. But in this case, we have a clear, strong area demand with the largest candlestick body ever. So you can use these imbalances on the bigger time frame to place swing trade positions for Forex, or use other Forex strategies for intraday and scalping if you want, and expecting these strong reactions. So a short-term trade can become a larger swing long-term type of Forex trade because we are using the bigger time frames to step in, okay, creating or expecting a bullish, strong bullish reaction as we are seeing. So now as the pair rallies from this strong demand level on the monthly, we can see now on the daily strong rallies. After such strong rally, we need a pullback, maybe we're creating new demand levels, a new ERC candles, standing range candles, but if it drops on there, it would be nice to buy again. Okay, so we can already see strong impulses happening. Okay, they were weak reactions, weak impulses, bearish impulses, weak impulses, weak bearish impulses, and now strong bullish impulses. Why? Because we have the monthly demand level in control. Okay, so these are the early signs for this Forex cross pair. This exotic is an exotic pair because it's the Hong Kong dollar versus the US dollar Forex cross pair. So these are early signs of new buyers entering in the market, perfect for Forex swing traders and intraday traders alike. So for swing traders, well, you can sit back and relax, because if you took the trade from down there on the monthly time frame, then, well, you just have to manage your profits. Okay, so the monthly and the weekly time frame suggest this move still has a lot of room to grow. I mean, a lot of room until up there at the top, and then probably breaking the highs. Okay, so you can use smaller time frames, H1 on our hourly and the 4-hour charts, where new demand levels will be forming on the daily demand there, on the 4-hour there. So offering shorter term setups that can become longer term swing Forex trades in line with the larger time frame, which is the monthly, and the bullish direction. So, but remember, as I always say, trading isn't about being glued to the string all day long. You will do that if you are an intraday or scalper, okay, an intraday trader. But you don't need to be an intraday zombie chasing ticks. Here, as you can see, it doesn't even move. Right now, it's just like the chart doesn't move. But if you go to the 1 minute, it will be like jumping back and forth, okay? Okay, up, down, up, down. This is like very stressful, okay? And you don't even know why that's happening, but we know why this rally, this bullish reaction is happening on this Forex cross pair for the US dollar versus the Hong Kong dollar, because we have the largest demand level in a long time, okay? So swing traders, Forex traders, give yourself some time to live, think, and breathe while your Forex setups work for you. Let the smaller time frames confirm, as you can see now on the daily and the smaller time frames, the bigger picture controlled by this monthly demand level on this Forex cross pair. So that's how you make trading sustainable and balanced. So we expect a strong bullish reaction, as I said, in the following weeks as this monthly demand continues to hold and develop. If new imbalances form on the daily or the 4-hour, then we can take them. So this is a masterclass piece in patience of this Forex cross pair. Proof that waiting for price to first to reach the imbalance and first to wait for the reaction. Okay, waiting for price to reach the imbalance and waiting for the bullish reaction, which is happening right now. So hopefully this will continue to rally, and also hopefully you will have taken this trade, as I mentioned like a couple of months ago. If you like this video, click on the like button and subscribe to my channel. You will get more trade ideas like this. Have a great day.